Good evening. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for the evening and a wild day on this Wednesday, the 15th of May, 2024. All right, why don't we first go to some of the data and take a look at what we had. You had the consumer price index come out, and on the headline number, you had a beat. They expected it up 0.4. It was up 0.3. When you come to the core, the market ex-food and energy was up 0.3 as expected, but still down 1/10 from last month. And then you came in here at the core ex-food and energy year over year, and I'll just go quickly there, to 3.6 as expected, and the prior was 3.8. So we dropped all the way through. When you came to the sales, you were flat on the headline number. Ex-autos up 0.2 as the market looked, but they did revise down February and March. So the market's looking at it in different ways. The market is saying, well, the consumer's obviously getting much pickier on what they're buying. They didn't buy as much sports equipment. They're dining out less. How do we know that? McDonald's is running a program for $5 meals starting in June, and you will get now your combo meal, and I don't know where you live and how much it is, but let's assume it averages $15. It's going to be $5 for 30 days. I don't know what the good of that is. They've got to tie it together with something. I don't know what that will be, because you can't tell me that in America, who doesn't know a McDonald's? So you're going to bring in traffic for 30 days and then they're going to disappear when it goes up triple again? There's got to be more to the story, at least as I see it. Now, tomorrow, you're going to get the housing starts and permit data at 7:30. The April import-export price is 7:30. Jobless claims will come out, and that's at 7:30. The Philly Fed Regional Business Index, let me catch my breath, right, at 7:30. The Federal Reserve, this is an important number, industrial production and capacity utilization at 8:15. You've got to keep production strong and capacity. If you're doing all that, the economy's still humming good. Energy analysts are going to look for about a 78 billion cubic foot withdrawal. And this is when you start withdrawing now in natural gas as it heats up across North America, and we all start turning on our air conditioners and whatever else we use. But you saw a big rally today in the stock indices, and let's understand, the market was setting this up. The PPI the day before we saw was higher, but the market focused on one thing, the March revision meant that was slightly, and I mean 1/10 lower. The market went bananas and looked at that. We know, at least, I'm saying that wrong. I believe is the right way for me to say this. The Fed Chair Powell yesterday saw the CPI numbers. Had to. Why not? They give it to the Fed members ahead of time. All right, and to be in the chair, I'm certain that he probably had that. And he still said that he's not got confidence yet that they have got inflation beat. And when pressed, he's comfortable with where everything's sitting. Now, we know that we'll get the different Fed members. Kashkari came out already, and he, of course, wants to just basically sit where things are for a bit and make sure that things lock in. But here's how I'm viewing all this. This market stays bullish until the Fed decides to cut. And when that happens, it means we've tipped. I think that's the way that you have to look for when is good news, and bad news, good news, all right? And that's it. Right now, seeing CPI fall, I guess you could say it's good news, and the market rallied off of it. But when the cut comes, why would the Fed be cutting? It's because you've tipped over. And when that tip happens, yes, I know they'll try to get ahead of the curve. They rarely do. You know that. I know that. History shows that. That doesn't mean we go crashing down, but there's a reason they'd be cutting. Build that into your psyche. At least think it through and you decide what to do with it. As we look at all the rest of the market, the copper went bonkers today. You got up to $5.12 a pound, $5.12, and then went back to $4.93 before you knew what was going on. I had a very long-term objective with that. So When looking at this MGM, you certainly aren't getting the play off this past 2 days where it's dramatically higher. So I'm going to call this stock a dud. Is the market's coming up? That's fine. The trend is up. The market, though, has run into the 200-day average. And my guess is the pros are going to say, take me out against that number. Just my guess. The trend is up. You're already, if you take a look where you're at with everything, and if you put on the slow stochastic, you'd have to be able to pop through this and run here to get much more. I think they're going to say they'd rather move their money elsewhere. So as much as I followed it last week, I thought it would get more of a pop with everything. It popped, but so goes the weasel. When you look at eBay through here, you're back up to these highs that you've been at. You're also overbought. This is another one of the stocks now that I'll watch it, but I think it's made its play here. Could it get to the upper Bollinger Band? Yes, but I doubt that I'd throw anything at that market. Now, the more I think about Tesla, and I've just got to share this with you, I wonder who's going to win from the autonomous driving. In the end, is it the car builder or Uber? I think it's Uber. So a natural takeover would be Tesla partnering in some manner with this, and it all comes together, all right? Now, I don't know how that's done, and I'm not claiming I do, but I was thinking about it the other day. I'm not convinced that Mr. Musk wants to be a car manufacturer anymore. He hasn't upgraded his Teslas in a long time. All the upgrades you're getting right now are fluff, all right? When I read about the Chinese cars and what they can do versus what the Tesla's doing, they're leaving him in the dust, so to speak. And it's something you got to think about. We've given up in America, we being Ford, GM, the Chrysler, Stellantis, on throwing a lot of money at all-electric cars. The hybrid is where everybody went to. So if you're going to develop the autonomous, who wins? I'm convinced. How much money can Uber make if they didn't have to pay drivers? And I read one report that the revenue part of that would be 60-some-odd billion. They still got to pay other fees to the auto people and so on. They'd make billions a year more. Something to think about. In this stock, this is a non-performer today. Everything's up. You're down $3.56. In Freeport, now you're up to the upper band. You've got to learn, in my opinion, you have to learn, all right? I can't say it's strong enough how to work with these bands. Because if you don't have them on a chart, you're always wondering, why did the market stop at that point? It's very important that you learn why markets stop at this point. Some charts act with them better than others. The bigger the trade, generally the better it acts. Not the bigger the trade like an AMC that spikes off of the roaring kitty, okay? And that to me was funny. I'm watching and I want to applaud the president, chair of AMC. He understood the game this time. He wasted no time in swapping stock for debt. Day 2 of Roaring Kitty, and he got rid of $163 million by diluting you holders and paying down debt. All right? I warned you, if you own it, they're going to just keep diluting you. It went from 12 to 5 already. Does that give you an idea? UGA. Lower highs, lower lows, embedded. So in the gasoline, today was an outside day to the upside. That's a warning sign that it's not a continuation pattern. That is a pattern where the market's giving you a warning it may have reached a low. So be careful. The resistance, if it rallies here, is 67.01 to 66.83, the combination of the 200-day average and the 100-day average of closes. If it ever cleared through all that and got through 67.93, you might go to 69. But understand something. You'd have to have a dramatic move to get up to the upper band of 73, $7. That's a lot from where you're at right now in this. And the Memorial Day driving season is a week from Monday. Yeah, the 24th is our Memorial Day. Remember that. So be aware of all that. In XLF, you are up to the upper Bollinger Band. So the financial services love that the Fed is sitting still right now, that they see it's gradually tipping, but the Fed isn't inclined to do anything just yet. While the swaps market is built in now a greater probability for a September cut, that changes on a regular basis. I wouldn't get married with that. I saw it today on CNBC. July cuts, September cuts, December cuts, and no cuts. I saw all the arguments, brilliant people explaining why they all see what they do, representing very large companies. We'll see which way it all goes. But the trend is up until you lose the embedded reading. I am bullish. And if you understand, you don't buy the Bollinger Band, you're looking to buy the breaks off of it a certain way. XLI, embedded reading. So the industrial sector still moving, which is interesting because if you looked at New York, it had nothing but terrible news today. We get the Philly Fed area tomorrow. We'll see if this can hold up with it. In RSPD, so the consumer. The consumer is number one. This market's overbought on this. You're over the 100-day average. The resistance is going to be the Bollinger Band. It's trading in between, but it hasn't even been able to get up there. Be very cautious if the market gets back under 4,800. It could be a sign this market wants to weaken from here. Until that happens, I wouldn't worry. And the home builders came charging out, okay? Now, Linn is the one that everybody's talking about. They think this can go up another 10% from current prices. You've got your embedded reading, higher lows, higher highs. You don't buy the Bollinger Band, but I've given these guys one thing. How many times have you heard me say, home builders are a bright bunch of guys. They have a playbook to deal with high rates. They have a customer that is caught. There aren't enough homes on the market to flood things. If you're watching Toronto, Canada, I think there's a record amount of homes or close to it that have hit the market. People are just trying to get out, not in America. We can lock in mortgages for very long periods of time. They can't quite there. So everything changes. Now, what's happened here is I'm watching prices go up if you can find a buyer. That's number one. If you can get a qualified buyer, is number two. All right. And if they go through with the transaction, number three. You get a lot of people signing on paper that aren't finishing. But when you go to a home builder, you're putting down the money. He won't even break ground until he's got your money in hand or a good chunk of it in a signed contract, so he's protected. Very different than an existing home sale. Higher high, lower low. If you can get over here, this 94.86 level, it'd be interesting. You don't have a trend here. You've got a market that's what I'll call in a wobble. You try rallies that have failed at the 18-day average for a while now. This has been going on since mid-April, and here we are a month later, and that's all that you've really been able to do. Gold, different. Gold is acting bullish. It's got the inflation story still. It's got a falling dollar. It's got the possibility, I want to use that word possibility, of the Fed going to cut rates later. So that fits into the bullish scenario. And central banks in other parts of the world are buying gold now. The consumer wants it, especially in China. And by the way, China, they're floating an idea where they want to take the equivalent of $1 trillion US and buy up homes for the underprivileged or the lower areas of their economy and buy them up. How they'd give them or how they'd sell them, I don't know. That would get a lot of the property people out of whatever debt they can get out of. They wouldn't pay market value. They'd buy them at a distressed value. Would that work? Didn't they try something like that a couple of years ago? I think they did. And if I'm correct, it didn't work well at all. But they're trying anything because the property market is such a drag. I didn't say they're doing it. I read discussions about it today. I think it was in Bloomberg or Reuters. It was one of the two. In SLV, you got up and over the upper band. Now, what's the importance of this? If you take a look, when you get over bands or under bands, you don't have enough here. You only had this one thing. You be patient. It comes back to you. That's what the market normally does. But In order to get this type of move, you generally come out of a narrower move and an embedded reading. You don't have either of that right here, so be a bit cautious. That is the purpose of understanding Bollinger Bands and why it's one of my mainstays in trading. I want the other guy to carry the risk up there. If it were embedded, let it keep going until it loses the reading, and then you got to call it a day because the odds favor. Doesn't mean it always works, but it favors. You're going to go back down to the key moving average, the line in the sand, the 18-day average. In copper, I was sitting there having coffee at my desk this morning, and I'm watching the copper price, and I'm going, is that a right price? And I'm watching it get over 5, and all the stops start hitting. And I'm going, at least I made a really good call for people that were listening. And it got to the Bollinger Band, and as you can see here in COPX, this is in the futures, she got thrown back here as the market was watching what the futures were doing. In TLT, be very cautious. You're getting up now to a very rich area, the 200-day average in the Bollinger Band, and you're overbought. I'd be very nervous there. And in the dollar, of course, today it gets hit, all right? They pulled the plug on the dollar because traders instantly, they go from dollar strength to dollar weakness. But the word instant isn't quite accurate. If you take a look right at the beginning of May, you got underneath the 18-day average. You do see this right here. When's the last time you got back over it? What do I tell you you do? When you're under an 18-day average, you have downside bias. That doesn't mean I said to go short. You have bias. You're looking for sell conditions. When you're over it, you're looking for buy conditions. It's one of my guidelines. It's in my charting course, and I show it over and over. In FXE, it's the flip-flop. The dollar index is weighted 57.6% to the euro. So if you're long the dollar or short the dollar, you don't want to play the euro against it. You're already in it. Go to the other currencies. So this is over the 100-day average, and you are now sitting at an important number right here, the Bollinger Band. Unlike the dollar, you're developing an embedded reading. Do you have one? Watch this. Both numbers over 80. Both numbers over 80. Whoops. And both on, let me come here, even here. You got your embedded readings. So on good pullbacks, this is the one that I like to buy, not selling of the dollar on rallies. This, to me, looks like a better play for it for the reason I've just given you. You put it all together, you learn how to play with some of this, and that's what trading is about. Investing is one thing, trading is very different. And you want to take the tools, and what you don't want to do is have so many tools that you get confused. I have seen investors, traders, people that try to come back to trading, and what they do is they carry the bad habit of carrying so many tools with them, they can't get a straight reading. I believe in 5. One of the most important are the Bollinger Bands. How you learn about it, the way that, at least that I do it, is up to you, but I teach it all in my video course. It's at IraEpstein.com, education. There's a cursor up here, and if you watch the ad that's going to play after this, if you move that cursor at the top, you go to IraEpstein.com, education. It's all waiting for you. I'm Ira. You have yourself a great evening. I'll see you first thing in the morning. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, If you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.